record high today. You take a look at the gain of better than 1%. That's a new record. S&P positive. Dow's a fractional loser at the moment. We're going to get to everything, and we have a lot to discuss, but we do have big news regarding one of the Mag 7 stocks, and it is that Brin has bought more NVIDIA, which I thought was pretty interesting, considering the stock has been up a lot. It's right on the heels here of Apple with market cap. Why'd you buy more here?
Yeah, so next week we know, which we're going to get into, we have the Oscars of earnings with all of the big names that we talk about. And I think that, how do you play that trade? I own NVIDIA, I've owned it for a long time, and I think the stock technically looks like it's breaking out. It had been consolidating for the past couple months, but I feel really confident. Microsoft, Apple, via OpenAI, Meta, Google, Amazon are all going to be talking about what? Their AI initiatives. And so I think next week we'll have some winners and losers, some disappointments, but I think all roads once again lead to NVIDIA, and you're going to continue to see huge CapEx spends from these companies as they're all individually looking to monetize their own endeavors into AI. And I still think NVIDIA is in pole position to benefit from all of that CapEx spend. So I took the opportunity to add to it yesterday.
Yeah, it's in the midst of pretty good momentum. It's up 18% month to date. It's been up 28% in some 3 months. As I said, it's barely off of its record high. The others have a little bit more to go. So unafraid, I find Brin to, even after that kind of momentum, to buy it here rather than wait for a pullback, which hasn't been out of the question for this stock over a period of time.
Yeah, well, I mean, the way I've been playing the stock is, I have sold calls against it. So when the stock sold down, I closed those call positions. So just owning the stock. And so I'm like taking advantage of the volatility. And I think that's a good thing to do with a lot of these names like an NVIDIA or a Tesla. But I just still see, when I'm looking at Apple or Microsoft's, earnings and revenue growth really aren't that strong. Is part of that because of all of the CapEx, especially Microsoft is going to be doing. And I just think NVIDIA is going to be the recipient. We won't get their numbers till the end of the month. And so I just think it's a good opportunity where next week is going to be a buy NVIDIA. And I think that's going to be a consistent story from all of these companies who are spending billions of dollars on Blackwell, on H100s, H200s.
Josh, it's a top 2 position, I think, for you. We're going to have to wait until November 20th for earnings, so we got a minute to wait there. What's your read here? What's your take on Brin buying more up here?
Well, I always root for Brin, but I would just say we know AI spending has been and should continue to be explosive. The question is, how much is already baked into the expectations for the stock? You're talking about a company that out of the last 5 years has had a triple-digit return, stock return, in 4 of those 5 years. You're basically talking about a company that over the last year has grown its earnings per share by 415%. It's grown its sales by 195%. And investors have gotten accustomed to that kind of eye-bulging, eye-popping growth. And it's just hard for me to understand where that's going to come from. We already have the expectations based on all of the other Mag 7 names and the hyperscalers that are going to be doing this sort of investing. We know that. We also know that there's been a global push for companies to experiment with AI, incorporate AI, etc. So who's left? Is Jupiter and Mars going to start contributing here to the forward guidance? So that's the risk. I don't necessarily think that it has to be feast or famine. There's a universe in which NVIDIA reports great numbers. The stock doesn't rally, but doesn't get killed either. It's just a massive company with already embedded huge expectations, and the gains of the past are unlikely to be repeated from here. Doesn't mean there's not another 10% or another 15%. I just think it gets harder from these levels, and I'm saying this as a long. So
no,
I'm
hear
in
you.
the name.
That's what. No, you're big in the name. That's why I went to you next. But Weiss, you're in the name.
Yep.
Is there more near-term risk in this name now, given the run that it's had? As I said, the timing of Brin buying it here. Just give me the way that you would observe, doing this now.
Well, just mathematically, when you're coming up to an event that's catalyst for the upside and the downside, given the performance you cited, there is more risk. But that's short-term risk. And Bryn buying it now, I'm sure that regardless of what happens this quarter, if you look out a few months, she's going to be happy she did. So it's always difficult to pick the timing on buying a name or adding to it, and she's adding to it. I haven't been there for a long time. So clearly right now they are in the sweet spot. And clearly, they can't meet the demand that they're seeing from customers and want-to-be customers. So it's a great thing to do. And as I mentioned, I think a few weeks ago, the fact that Jensen Huang has been so visible and talking about demand, he's got to deliver. And him not be anything but a foolish person, I believe he knows it's going to be a great quarter. Now, what the whisper numbers get to be when numbers move like this, who knows, but who cares? That's a moment in time.
Makes the point, too. I mean, the factor of momentum is a very, very powerful. It's a very powerful thing.
But I'd also say that Taiwan Semi is the direct, perhaps the most direct beneficiary of the strength in NVIDIA. And they announced on their Phoenix fab, right, that yields are 4% better than their Taiwan fab. So that is powerful. That stock's had a good move, but I still think it's going to have a great move. Over a 4-year time period, if you look out for 23 to 26 forward earnings, they'll have doubled revenues, right? They'll have doubled earnings. I mean, that's tremendous performance. Not quite NVIDIA-like, but I also think it's much more sustainable.
Why is there a willingness, Jim, to get into a name even after a run like this? Because when you look at, as we get ready for mega cap earnings next week, the bulk of earnings growth in Q3 is going to come from tech and comm services. Now, the mega caps need to deliver. The bar is high. But when you look at the earnings growth expectations, as I say, tech and comm services are expected to lead the way. Tech up 15.2% earnings growth in Q3. Comm services up 13.5% in Q3. You take those out, and where do you get earnings growth out of the rest of the S&P 500? Down 0.2. So this is the show. It will continue to be the show, and there is no trepidation from Bryn buying a name like NVIDIA 3 weeks or so, 3-4 weeks ahead of its number.
Just on the NVIDIA, before we get to the earnings, you covered the momentum. Josh and Bryn covered the fundamentals. There's one other aspect that I think we need to cover, which is the seasonality. When you have this big a year, anyone who's behind their benchmark is going to play panic time to catch up. And how do you do that? You throw money at the winners like NVIDIA. It is likely in the next couple of months to go higher along with the market, because that's the easiest way for professional money managers who are behind to simply catch up. And also, by the way, a retail investor isn't going to want to sell this. I advise retail investors. I wouldn't tell them to take capital gains right now. So there's a lot of reasons I think Bryn is right. To your point about the earnings, well made, and unfortunately it's true. Once again, this is the pattern.
I'm not saying it's a bad thing. I mean, are we set up? Do you think we're set up well into mega cap earnings like JP Morgan's trading desk does, which they say as quote, as we've seen, I'll get you to react to this, as we've seen with Netflix, ServiceNow, Vertiv, through their earnings, investors are very happy to defend/chase their winners despite any earnings question marks. I think the evidence plus cleaner positioning sets up well heading into the mega caps next week.
Yeah, so I do think mega cap tech is set to outperform. However, I don't think it's going to be a monolithic. I don't think everyone's going to be a winner. Apple troubles me a little bit. You know, when Apple announced Apple Intelligence, the stock surged tremendously, and that was on the perception of a super cycle upgrade, which everybody is saying is not happening, and I agree. I think it's a little bit vulnerable at a low 30s multiple. On the other hand, as people come into this market, and they are likely to continue to come into this market, automatically passive flows go to Apple, so that's an ameliorating side there. But I do think you have to pick your spots here. Microsoft, we acknowledge, has not participated as well as the others in this rally. The one undervalued name, Scott, that I'm most interested in is Alphabet. Because, yes, we all know about the regulatory issues, the fines, etc. But the real question is whether something like Perplexity is actually eating into their search business. That's a question to be answered. And if the answer is no, this is an incredibly cheap stock.
Alphabet, Amazon, Meta, reiterated by today at Canaccord, ahead of these big earnings next week. We can show you the calendar, too, just to remind you of the pattern in which these companies are going to report. But here's the note from Canaccord today. 220 on Alphabet. They expect solid Q3 results. Amazon, same, just there. $230 the price target. Meta goes $700. It's interesting with Apple, which did get downgraded today. If Jim has concerns, he's not the only one. Cut to underweight doesn't happen that often. From sector weight, $200 at KeyBank. They list a number of factors that would lead you that way. There's been a lot of noise in the marketplace about orders being cut, from a few million to 10 million, whether it's true or not. I interviewed Eric Woodring of Morgan Stanley yesterday, who does acknowledge the near term could be a little rough for the stock after earnings. He defends it, though, longer term because he does believe in a robust upgrade cycle. Listen.
I do think at least the near-term tactical pain trade is down, but I still do believe that there is fundamental support for this stock because investors can look past the iPhone 16 to the iPhone 17 to the excitement around AI upgrades, at least starting with the iPhone 17, to say, well, maybe there isn't necessarily upside at earnings as we foresee it today, but there is also relatively limited downside that makes this a safer name to play amidst what has still been relative volatility in the market.
Brent, I'll give you the first shot at that. Is this a safer stock to play right now, despite some of these concerns?
Well, I mean, Apple's giving you market performance this year. So that being said, not so bad. I do think where the analyst earlier was spot on. It's like he said, this is going to be a slow upgrade path. I think it's going to be incremental. So as an investor, you have to say, well, how much sentiment about this AI frenzy is priced into Apple versus reality? And I think they're just going to continue to give you 5% revenue growth, 5% earnings growth, most of which I think is with stock buybacks. And so I agree, this is a longer term story, but this is such a beloved company, beloved stock. Tim Cook is probably the best in the business. And so I think the stock will continue to be a market performer. And so I don't think people are going to sell it. I think to get to $200, which is what the original analyst said, you'd have to have some market event. I don't think it's going to go to 200 on its own while the market continues to go higher. That doesn't make any sense.
Yeah, Weiss?
I agree with that exactly. I'd say, look, we can all say, hey, it's overvalued, and it is for that kind of growth. Even when you add, that's got an enduring brand. But that's the valuation paradigm that it continues to trade in. So I don't expect anybody to come out or any events to come out and say, no, we know we've been wrong all these years. We know that they're too reliant on the telco companies for the subsidies, but so they'll keep playing here. So it's something that there's always a buy on the dip mentality. It may take a little longer, certain time they do. However, the real issue to me is China. China's a very important market for them. It's the largest cell phone market in the world. And you're seeing Huawei make good strides there, much bigger growth. And as Apple moves their supply chain to India, don't think there won't be repercussions from China on that fact.
To your point, Apple's Q3 smartphone sales slip in China. Huawei's said to soar. That's according to IDC data. So they're looking at numbers and deciding where market share is going. Obviously, there's been issues in China for Apple, which is, 20% of revenues, at least, maybe give or take. Josh, how do you see this before we move on?
Well, if people are excited about the AI, can we wait till next week when it comes out? That's number one. Number two, it's only initially going to be available in English, which dramatically changes what you would expect from a normal Apple upgrade cycle globally. They're just not going to be as excited about it in overseas markets as they're going to be here in the U.S. So I see that as like sort of a reason for why this will be an underwhelming, very slow upgrade cycle and not a rapid one. And we've been saying this all year. That's been consensus. And now it looks like actually it's turning out to be right. This in my hand right here is the iPhone, sorry, there's people's text on there, is the iPhone 16. It's the Pro Max version. And one of the things that people are picking up on is that the upgraders are consistently opting for the Pro Max version. That's the version that Apple makes the most money on. So the silver lining here is when people do upgrade, they're upgrading to the bigger, better phone. And that's kind of what you would want to see if your concern here is on margins. The last thing, it's absolutely not a cheap stock. 23 times 2025 adjusted EBITDA, according to the KeyBank analyst, and that is above the 3-year average of 20. Okay, we know this, and yet the stock gets downgraded and goes up that day. Why? I think that people want to see what this AI can really do if it becomes a transformative user experience, and if once it's out in the wild, there's buzz and people are talking about it, and the upgrade cycle potentially speeds up. That's an upside catalyst that is possible, and we just don't know yet.
Hey,
Let's wait 5 days.
Let me ask you one thing. Speaking of 5 days, let's pull up that calendar again of the 5 days that lie ahead. Which is most important for you, Josh, of the stocks that you own, which are Apple, Amazon, Alphabet, and maybe the most important and deciding factor on this sector has to do with the stock you don't own out of the 5. But which are you keeping your eye on the most of all? Which do you think matters most to this market?
Let me really slightly reframe that. I'm the most excited for Amazon to report, because I think the doubt on that stock is probably overdone, and it kind of technically it's kind of coiled, and to me that's the one that could potentially do something akin to what we've just seen with Tesla and Netflix if they have a good report. So that's the one that I can't wait. And it's on Halloween, so I might be in my Bezos costume. The one I'm most worried about is Alphabet, and this is a long-term holding for me. And I've been through bad quarters for Alphabet before, and I probably won't react almost no matter what they say. But I'm definitely concerned here. The stock is acting terribly on an absolute basis, and relative to Meta, it's like not even playing in the same arena. They are really going to have to convince analysts on that call that what they're about to do with ads on the Gemini AI search result is going to be at least as profitable as what they've been doing with search. And they're now really in a position where they have to kind of defend their turf against companies that didn't exist 2 years ago, like Perplexity. So that's the one that I'm most worried about going into these numbers. And, it doesn't necessarily mean that it's going to be a binary outcome. It might just be a meh quarter. But I feel that management there has their work cut out for them.
Yeah, we'll see. It's going to be exciting. That's for sure. Earnings pretty good so far. I mean, that's one reason why people remain bullish on this market. To let you know, yields are steady today. Consumer sentiment did beat. All right, welcome back. We have some moves to tell you about. Jim Lebenthal is the first, and he's bought Lockheed Martin.
Yes.
Why?
Well, for one thing, I have no defense exposure. I sold Boeing back in January. That was my defense exposure. And as I think about things, this is a big picture trade. Unfortunately, the world is going to be involved in kinetic warfare for quite some time. To me, it doesn't matter who the president is. Certainly last weekend's BRICS conference made it clear that there is an alliance of countries that want to upset the Western world order. And that's going to take the form of kinetic warfare, as it has in the Middle East, in Ukraine. We've been spending a lot. We've been expending a lot of missiles. Those are going to need to be replaced. Lockheed Martin replaces those. Lockheed Martin is the producer of the F-35, for which the order book is strong. The things that have held me back from this, Scott, and I've wanted to buy this for quite some time, two things. One, the price of the stock is a little pricey. I have to admit that. But after a while, I've just got to bite the bullet here and get into it. I started with a small position, so I want everybody to know that. If the market comes down and the multiple with it, this will be a source that I add to. But I also want to say that at the most recent earnings report, there were signs of life in the operating margin. People who have followed this industry for the last few years have known the top line is growing, but operating margins within the industry have been terrible, mainly because of supply chain issues. Those are starting to abate. You're starting to see operating margins improve. I think there's more to gain.
Didn't you own, was it Raytheon? What?
A couple of years ago.
You used to own stocks in this space.
I owned Raytheon, and I sold that similarly for Boeing because there were those big issues with one of the engines that they make. Frankly, that was a flat-out mistake. I mean, they got through those issues. Raytheon has been a big player. I thought about getting back into Raytheon, decided on Lockheed Martin, and here we are.
Okay, good stuff.
Raytheon's a good company.
All right, thank you. We got some big oil earnings next week, too. And on that note, Bill Baruch joins us now. He is on the phone because he's made some portfolio moves that play into that space. Good to talk to you. Let's run through these. You sold ConocoPhillips for a loss. Talk to me about that move first and then what you bought.
Yes, we have quite a bit of refinery exposure with Marathon Petroleum, and ConocoPhillips is the refinery-heavy name. What we're looking at there, too, is its seasonality is really ugly until January, typically margin pressures in refining. So cutting that, taking some of the loss, tax loss harvesting, and then really that's kind of how we're looking at that and moving that cash into SLB. So that name reported earnings last week. I find it at a discount right now. EV to EBITDA is back near the COVID lows. So I think it's a terrific opportunity there. Technology leader, free cash flow juggernaut, terrific balance sheet, and come back to that, just a great opportunity.
Yeah, I mean, it's buying it again because you sold it not that long ago, which is an interesting move. Yeah.
30 days ago, so recycling that tax loss harvesting.
Okay, good stuff. Thanks for calling in. Let's move the ball around. Bryn, so we got Exxon and Chevron coming up next week. You've got Devon, you have Diamondback, you got Energy Transfer. Talk to me about this space.
Yeah, I mean, this is really an interesting space where individual securities within the sector have such huge dispersion of the return. Good example, I own Energy Transfer. It's a pipeline. They're up 18% price only. Forget about the 8% yield you get. Versus Devon on the E&P side is down once again this year, down 13%. So you really have to pick your spots. As I think through going through 2020 into 2025, I'm growing short on Devon as I have before because just the market doesn't like the stock. Versus a Diamondback, the mineral rights space, which we love, Viper Energy, has just crushed it this year, up 66%. So I think you really got to pick your spots. And so I think for 2025, I'm going to stick with the pipelines and the mineral right companies and steer away from the more volatile E&P names like a Devon.
Josh, you still have the IEO, the oil and gas ETF?
Yeah, I think there's a potential catch-up trade here. This has been the worst place to be sector-wise in the entire market. And it's now the cheapest sector. It's trading at 10 times price to free cash flow, 12 times earnings. The median return within the S&P energy names is negative 3% year to date. That's versus a 30% return for the S&P. So you have a situation where you're looking at the market, it's run away. You've got huge winners in tech, huge winners all over the place, quite frankly, utilities, REITs, banks. So it's like, well, what can I do now that might make a difference between now and year end? I think some of these companies, maybe not the whole sector, are going to get discovered. 54% of these names are negative over the last 12 months. So you have tons of places to look if you're looking with a value discipline. The problem here is that WTI is at $71. It's up 1% this year. It's just not been anything to get excited about. WTI hasn't been above $80 since July. When that changes, these stocks can start to work. We don't know the timing. We do know you're not taking a lot of risk to put that bet on.
All right. We have a news alert, and Phil LeBeau has that for us. What do we know here, Phil?
Scott, the Wall Street Journal is reporting something that has been widely speculated about, something we asked Kelly Ortberg about at Boeing when we interviewed him earlier this week. The report is that Boeing is pursuing or considering a sale of its NASA operations, essentially, its space business, or the bulk of its space business, primarily related around the Starliner manned crewed vehicle, as well as its operations in support of the International Space Station. This is not a surprise. We asked Kelly Ortberg what his plans are for the future after Boeing reported its Q3 results. He said, we can do better in commercial and in defense. And I specifically said, I don't hear you mentioning space. What's going to happen there? He essentially gave we're looking at all of our options. So it's not a surprise that this report has now come out that Boeing is considering a sale of some of its space operations, specifically Starliner, and those operations in support of the International Space Station.
All right. Good foreshadowing, anticipation, too, by you, Phil. Thanks. Phil LeBeau with the news there. Let's get the headlines now broadly with Silvana Henao. Hi, Silvana.
Hey, Scott. Good afternoon. The CDC is reporting an increase today in the number of people affected by that E. coli outbreak linked to McDonald's Quarter Pounders to 75 people in 13 states. The outbreak has led to 22 hospitalizations and 1 death, but the CDC says the risk to the public is very low because of the actions taken to curb the outbreak. McDonald's said it has told restaurants to remove onions from their supply, which officials are looking at as the possible point of contamination. A federal judge today blocked Virginia from purging its voter rolls of alleged non-citizens. In her ruling, the judge said the purge was issued too close to Election Day and ordered the reinstatement of the more than 1,600 people who were already removed from the lists. The state vowed to immediately appeal the ruling. And a report from the Department of Health and Human Services Inspector General found Medicare paid private insurers over $4 billion in taxpayer money for diagnoses from home visits that led to no treatment. The report recommends for the first time that Medicare restrict or even cut off payments for home visit diagnoses. Scott, I'll send it back to you.
Silvana, thank you very much for that. Silvana, now coming up in today's ETF Edge next, the anti-Mag 7 trade. Bob Pisani standing by with those details. He'll explain next. All right, welcome back. Chart of the day. It's Deckers. Probably no surprise. It's up double digits, nearly 11% here. On the back of the earnings here. Best day since May 24th. Sales up 20.1%. The expectation, 10. Doubled. They raised their outlook. Telsey raised price target. Dana Telsey did a 190 from 183. Reiterate, outperform. Skechers, they beat. Sales up 16%. If you're selling the right stuff, I mean, up 20 for Deckers, up 16 for Skechers. You got On, right? That's how you're playing this?
Yes, and that's been a wonderful stock.
Yeah.
It's having a nice little echo today. I think last I looked, it was up 8%. I can't see there, but
yeah,
it's
up
day.
6.5.
Yeah, and look, this plays nicely with our conversation we were having with Dubrovko. If you're in retail, and this speaks to the health of the consumer, you have to pick stocks. This is not a one-size-fits-all industry. Whether it's shoes, and you can look at Nike as having a terrible year, and it's a direct competitor with Skechers. It's a direct competitor with On. It's a direct competitor with Hoka. Same with Lululemon, not having as good a year. You can look at Grand Retail overall. Target's not having as good a year as Costco.
Yeah.
You have to pick places, and you have to be in the hot brands. So whether it's Hoka, Skechers, or On, those are the hot brands. I'm sorry Nike is not, Lululemon is not.
Well, Weiss, you used to own Lulu, Dick's Sporting Goods, obviously. There are really good places to be in this space, but to Jim's really good point, you have to be super selective.
It's got to be the brand. I mean, that's where you've got to be. Who's picking up share? On just had a great move in terms of share. You see it everywhere, and I think that relates obviously to problems that Nikes have and that Under Armour is having. So they're the hot brand. Hoka, I think, is less sustainable, frankly, but Deckers overall is just, I mean, it's been a juggernaut. And this was counted out for dead, as was Skechers. Many, many times. Short interest in these things was up to 40, 50%.
Yeah, that's a nice day right there. We'll continue to follow that. Santoli, he's up next with his midday word. All right, we're back. Our senior markets commentator, Mike Santoli, has joined us here at Post 9. So we've had record highs for the S&P and the Dow, and then finally the NASDAQ gets one of its own.
Yeah, it seems a little bit of an attempted re-rotation in that direction. I was looking back to how the NASDAQ 100 has done since July 16th. That's the old high. It's obviously just slightly positive. Since that point, Meta's up 18%, NVIDIA's up 13%, Microsoft down 4%, Google down 11%. In other words, it's not one trade.
Bifurcated.
So that's probably a healthy way to do it. There's been a little bit of a reset. They've come back to the pack. And then beyond that, I mean, it's still a good news is good news response because you have a consistent beat on economic data in the last few days. And the market is treating a 4.2% 10-year Treasury yield as just an acceptable cost for that good news.
So as we look to the mega cap earnings next week, because there has been that bifurcation that you just referenced, the bar is going to be higher for some versus others, not as this monolith as you suggest. I wonder how that's going to be digested into the market.
Yeah, it's interesting because you've also seen the valuations kind of come off the boil just slightly, and so it's not as if I don't think any of the stocks, really aside from Meta, are that far out, on a limb where things have to look perfect for the stocks to actually hang in there a little bit.
Well, NVIDIA's rallied a lot.
It has actually in a short period of time. It's just goes back to June. It's just barely up from that point.
Sure.
And that's not for a month, right? You're not hearing from them soon. So Microsoft to me is the interesting one. Have expectations been beaten down low enough? Can they either come out with whatever their capex or monetization strategy is and change the story?
All right, I'll see you on closing bell. We'll take viewers through the final hour. Look forward to that. We'll do finals next. Let's do final trades. Bryn, you're first.
Yeah, after the monster move in Tesla, if you want to put on a short-term hedge and you own Tesla, you can sell the November 280 calls and collect a whopping $12 for about 3 weeks.
Okay, it's been one heck of a week there. Josh Brown.
Sweet Green looks like it wants to take out this year's high, which was set about a week and a half ago. Something's going on. The stock looks really good.
What's going on is the stock is up a lot. Up another 4% today. Josh, thank you very much for that. Farmer Jim.
AbbVie, this is a great drug company with a management that has done all the right things, including replacing Humira and making key acquisitions.
Okay, and Steve Weiss.
Digital Realty Trust, they reported a great quarter with bookings. If you want to play AI, play it through data centers.
That stock up nicely. All right, everybody, have a great weekend. I'll see you on the closing bell, though.